Over the last few weeks, the stock market has been, let's say, choppy. That is due to several factors, including tariffs. There has been threat of inflation and even slowing consumer spending, which could hint to a recession later down the line. None of that, I mean none of that, is a good thing. But what if there was a place, what if there were two places that were worth investing in that is relatively stable, relatively immune, or at least resistant to all three of those threats, or at least the majority of those threats? Let's go ahead and break it down. Now, we have talked about some, I don't like to say safe havens, but some good places to invest right now. Okay, we've talked about energy, we have talked about finance, we've talked about places like Netflix that occupy these really nice areas where tariffs don't impact you that much. All the other stuff that's happening that's tanking the entire stock market don't really impact us to a degree, and those have been nice. I'm trying to find as many places as we can, but there's one more that's out there. We want to uncover all the stones we possibly can. Well, there is real estate. And there are two types of real estate we want to discuss. There's real estate investment trusts, those commonly known as REITs, and then you just got companies that invest in real estate. Okay, so I'm going to give you two, but let's talk about why, because the why is important. It is extremely important as to why it could be a great place to invest. I'm not just talking about, just buy a house. I'm talking about real estate stocks specifically, just to be more clear. But the reason is this. We know about the threat of tariffs, and that is what's on people's mind primarily, at least at the time I'm recording this video. I'm doing this on Monday. It is this. While you're trading goods between country to country, real estate ain't one of them things you can trade. I think that's quite obvious. You can't trade you can trade the bricks. You can't trade the brick building. That building ain't moving. Okay, so you can't slap a tariff on that. It is stable, it is not moving, and usually when we talk about REITs, real estate investment trusts, they are things that are, again, stable, consistent, and they pay a good dividend. And if the stock market continues to fall, and that is a big if, what are investors going to look for? What are you going to look for? Something reliable, stable, and if it pays a good dividend, there's a bonus to you. I'm here to tell you now that REITs might come back in fashion. They haven't really been in fashion over the last 2 to 3 years. They will be now. All right, so one of them is in fashion right now, and that is Welltower. The stock symbol is WELL, W-E-L-L. They are what they say is the healthcare infrastructure. We're talking about, elder care facilities, Alzheimer facilities, things like that. I don't really like talking about elder care facilities, Alzheimer facilities. I've had family that's had to deal with that. It's terrible. Okay. Ugh. All right. And unfortunately, as we know, follow time is undefeated. All right. So, and we got a very large aging population. There's that. All right. They're going to be in business for a very long time, unfortunately. However, the stock is up at the time we're doing this. The stock is up 29% over the last 6 months, up 69% over last year, and it does pay a 1.71% dividend. Now, 1.71% is the best dividend in the world, but I will challenge you to go and find another stock that is paying nearly 70% and paying a dividend higher than that. It is very difficult to find a stock that does both of those things, to do both. Okay, that's the key here. What is paying that high of a return and paying a dividend anywhere in that vicinity? That's what we're trying to do. Now, the benefit here is because they're not affected at all by tariffs, we don't have to worry about that, right? And you have a locked-in market. Again, I don't really love the fact that they have it, but it's a locked-in market. It's not going anywhere. You can't pick up buildings that go back and forth. People are going to be looking for safety and security if this is something that is going to continue. That's what investors are going to look for. That's what I am going to be looking for if this is something that's going to be something that's going to extend, right? Especially if we're going to have to deal with inflation again. If we are going to have to deal with tariffs furthermore, right? If consumer spending starts to drop, we're going to be looking at healthcare, but only in certain parts of healthcare. This might be one of those places. So have this one in your back pocket. Definitely study this one more. REITs are going to come back around. Welltower might be one of those at the top of the list. And then you have one that is not a REIT but invests in real estate in general. That is CBRE. The stock symbol is kind of in the title here. Now they are more of a investment manager of real estate, if you will. And they own towers, they manage towers, they invest in commercial real estate. Let's call them a commercial real estate company. It's the easiest way to do it. Now, the interesting thing with them is this. Over, let's just say since 2020, the company had, for a while, had not been good. And that's because of a few reasons. We had COVID, people left cities. But we knew that. And then we had the rise of remote work, which made a lot of sense. Until what? We had a lot of major companies force a return to work. Now that that is the case, now I'm not personally, I'm for remote work, okay? Let the people be free. As long as you getting your work done, it don't matter where you at, all right? But now that that's the case, now you're starting to see the returns on the balance sheet and really in the returns for the stock for CBRE. So for example, right now, it's up 22% in the last 6 months and up 51% over the last year. Now the company, unfortunately for us, does not pay a dividend, but again, for real estate, it's there. It's not going anywhere. And in a case like this, it's something that's kind of locked in, right? We're beyond COVID. It ain't going nowhere, and hopefully it don't come back. Lord, please don't come back. I know we got weird things happening at the HHS and whatever they doing over there, so please don't come back. But, you know, now that you've had people that, you know, we're kind of already back to work, you really don't see remote work coming back. It's kind of locked in. People who have the hybrid working situation, they have it. And it's kind of, it is what it is, right? We're kind of back to stability. You're either going to increase it or it's just going to stay where it is. So we should be locked in, and the stock should, in theory, remain consistent. So you should see relatively stable returns here. And again, as people are looking for safety, if the stock market is going to continue to be choppy, CBRE should be a place that you would go to because it is inflation resistant, and it is definitely, I would think, tariff resistant. So it's going to be somewhere that should be relatively attractive. So that is another place. But here's the thing. If the weakness here, especially for CBRE, is definitely a recession, right? That is something that I would be concerned about, because if the recession, if, you know, companies were to go bankrupt for some reason, finance stocks would definitely be hurt, right? Because they can't pay the rent, wouldn't be able to pay for buildings, and then you start to see CBRE start to fall apart. That would absolutely be an issue. Your concern would be, well, why would I invest in that if I think we're going into recession? Here's where you want to pay attention. Number one, we don't know at this point in time if we're going into recession. That's more of a hyper fixation. That's more of a hyper worrying. You're worrying about things that we don't really know yet. We got one report that said people slowed down on the holiday spending a bit. Okay, it's just March. Let's relax. Also, if we were headed towards a recession, and if we were, where CBRE were to collapse, and that were going to be the case, we would have much bigger worries, because not only would the CBRE fall, you would have finance to fall, and a whole bunch of other stocks would be red as well. Again, this today would not be the time to worry about that and try to switch out of those stocks. So, you know, I wouldn't worry about that today. That would be something to, you know, you can make money now. We can push that one down the line. And also, we would have time to adjust to that and see that one coming if that were to be the case. And the reason why you would have an opportunity to adjust, because we do have those quarterly reports. You do have an opportunity to see from their perspective, hey, quarterly report, what are you seeing? Are you seeing sales slow up? Are you seeing things slow down? Slow up. Are you seeing your sales slow down? Are you seeing some adjustments? Are you seeing, you know, people increase, sign more contracts, do more things, so on and so forth? Or are you seeing some trends, right? And they list all these things. You can kind of see, wait, something's different. I should be concerned about something. So usually, if that's your concern, you can see these things in advance. And if that's your concern for CBRE, you could avoid that one and just go to Welltower, because Welltower doesn't have that exact same amount of risk. So there are ways to kind of manage that to a degree. But in that case, we got buttons to press, right? We've talked about finance, we've got energy, which you would still need, we've got Welltower, which is in healthcare, we got intuitive surgical, which we talked about, we've talked about Netflix. Like we've got different buttons to press in all scenarios, or at least the scenarios we're about at this point in time. So you have what you need to manage the chaos that we might be experiencing right now. And then also, don't forget the basics. Do not forget the basics. Them index funds still work. They still work, okay? If you need a refresher on the basics on how dollar cost averaging works, or any other investing ideas that you need to work on, then feel free to check out these videos right here.